So this morning I'm looking through some news stories. I see what kind of sticks out to me is some information about Carmax, that the stock had at the open fallen about 10%, and that the CEO of the company had unexpectedly departed or resigned. So not too long ago, just after the close of the markets, I pulled the ticker on Carmax, and here's what happened. Fell basically 25% today, the stock. Let me share the article with you at CNBC that details what's happening with Carmax. And I'm going to also share with you some information I pulled up on their finance facilities, how much they have out there in loans to larger banks, lines of credit and such, and what's going on with their CEO that is unexpectedly departing, right, from the company with what I can tell is a yearly pay package this 2025 over $17 million, right? So what CEO resigns from a company unexpectedly with a $17 million pay package unless something else is going on, okay? But before I jump into the story, as I always humbly ask, please subscribe to the channel if you guys aren't subscribed so we can keep growing the community. And welcome to all the new subscribers that have come over the last couple of weeks. I appreciate you being here and watching. The reason why I think this Carmax story has more legs than maybe the Main Street or mainstream media is letting on is twofold. Number one, what percentage of subprime or distressed, auto purchasers are in the receivables on Carmax's books, and number two, what portion of those receivables is secured by loans from larger banks, because we know what's going on with the squeeze in the non-depository financial institution, loan failures and private credit blowing up over the past few weeks and only going to get worse. So Carmax may present kind of a multi-tier story from the consumer perspective, which we know what's going on with them, auto repos at all-time highs, and we know what's going on with private credit. Okay, that's why I thought it was worth sharing with you today. So hang with me for a few minutes and let me get through the story. So I have CNBC, Carmax stock falls about 10%, right, as of this morning at the open, as CEO steps down, used car retailer releases weak outlook. Detroit, shares of Carmax fell 10% during pre-market trading. Thursday, after the used car retailer announced a weak preliminary outlook for its current fiscal quarter and said CEO Bill Nash would unexpectedly be stepping down. The preliminary outlook for its third fiscal quarter includes an 8% to 12% decrease in comparable store used unit sales, and net earnings per diluted share of between 18 cents and 36 cents, including 9 cents in non-recurring expenses related primarily to the leadership shakeup and other workforce reductions, right? Corporations normally don't reduce workforce unless they're going to go automated and use AI, or unless their revenues are not sufficient to pay, right, their employees. Regarding its CEO, the company said board member David McCrate, a retail clothing executive who served as CEO of Lulu's Fashion Lounge Holdings, right, and president of Urban Outfitters, will replace Nash on an interim basis until a permanent replacement has been found. Carmax also said that Chair Tom Folliard, an executive with a 30-year history in the company, has been appointed interim executive chair. I'll tell you why this is interesting. And if you guys find something different on this, let me know. But according to some data I pulled up, it says the term for Bill Nash as CEO of Carmax effectively ends as of December 1st, 2025. When he steps down, it will be succeeded by interim CEO. Okay, so the question is, did his employment contract term formally end as of December 1st of this year? And if so, why would he be resigning, just weeks before? Okay, or is this just information updating this unexpected resignation? Either way, it raises questions. It says the board has decided that more direct involvement from David and me, according to the new CEO, will help strengthen the business in this transitional period. During this time, we're focused on driving sales, enhancing profitability, and reducing costs. The announced changes are effective December 1st, according to Carmax. In connection with the announced changes and outlook, William Blair downgraded Carmax stock to market perform from outperform. Carmax has struggled this year with its stock price down roughly 50% in 2025. So that was before it fell another 15%, okay, throughout the market today. So a 65% drop in the stock of Carmax. That doesn't happen to a company that is strong, okay? This compares with other car retailer stocks being up double digits, including 52% increase this year for online used car retailer Carvana. Nash, on Carmax's most recent quarterly earnings call in September, admitted the results that fell short of the company's expectations as well as Wall Street. The results included notable declines in nearly all key earnings, including sales, net earnings, and gross profit. Those September results led to significant decline in shares of the company and negative analyst reactions, including $24 price cut by Morgan Stanley. So if you have Carvana, okay, rhetorical question, going up double digits, 52% increase this year for Carvana alone, why do you have Carmax tanking? Is this just a internal management decisions? I find that hard to believe. You have boards, you've got committees. Okay, so why would the consumer going into Carvana be any broker than the consumer going into Carmax? If you guys have some underlying specific data that are supported, to support your thoughts, please let me know. Something again doesn't sound right here, and I wouldn't be very surprised to see, again, tinfoil hat time, that we see Carmax come out and say there's underlying issues with regard to its debt levels, with regard to its factoring and the receivables and the things that are securing its larger lines to JP Morgan, et cetera. So it says Carmax has its own captive. I pulled this from AI sources. Carmax has its own captive finance arm, CAF, that originates and services retail auto loans for vehicles sold by Carmax. It says that CAF financed about 42% of Carmax's retail used unit sales recently, quarter one 2026, 41.8% using its own originations. Okay, so of the cars they sell, they are financing through their finance arm, the CAF, about 42% of those vehicles. Says that Carmax has a $2 billion with a B unsecured revolving credit facility available for working capital and general corporate purposes. That's according to Edgar Online. As of November 30th, 2023, which we're going back 2 full years, that the $2 billion facility was fully available. It'll be very interesting to see if that facility is still in place, that $2 billion line of credit, to see over the last 2 years, okay, as we have the CEO going out unexpectedly, okay, to see how much of that $2 billion line has been tapped into. Because we know that on the other end, consumers are not in good shape right now. And nothing against people that buy cars from Carmax, but the question is, if they're financing used cars from Carmax, they're probably not in the top 1%, okay, of the wage earners in the country. And we know what's happening to the bottom 95%. They're falling behind. They're going late on obligations. Their credit scores are falling. Delinquency rates are falling. Foreclosures are up. Repos are up. Okay, so this is going to be very interesting to see what happens with the debt. So they also report term loans. In addition to their $2 billion, let's say, revolving line of credit, they have a $300 million term loan maturing June 2024, so it matured already last year, and it's $700 million. And I'm interested to see if that, by the way, got kicked, if the loan term got extended, okay? and if they had serviced the interest on that loan as it became due. And a $700 million term loan classified as long-term debt in the same filing. Carmax has a 2019 credit agreement amongst Carmax auto superstores and lenders. And here we go. The lenders, Bank of America, JP Morgan Chase, and Wells Fargo. All right, so apparently they are the ones that have extended the lines of credit and the term loans to Carmax. And here we go to yesterday's story I did with Travis. If you guys saw this relative to the J. Crew blocker, if you haven't seen that J. Crew blocker, the JP Morgan is now implementing evidently in their loan agreements, okay, that allows them to go after collateral if it's wrongfully or fraudulently assigned away or hypothecated against the covenants in the loan agreements, and they can go after that collateral wherever it's located, okay, kind of, let's say, preempting the non-recourse loan general rules. So listen, this is explicitly stated. It says that the promissory notes issued, okay, by Carmax, promising to repay the debt to the big lenders, are secured solely by the assets of the trust, the funding arm trust of Carmax, i.e. the receivables pool and the related collateral, and are not direct obligations of Carmax, Inc. or its servicing or sponsor affiliates. Okay, so the question is, when did JP Morgan issue these loans? If they're behind the $2 billion line of credit, we don't know, or any of the more permanent financing loans. The question is, or excuse me, the term loans. The question is, were they implementing these J. Crew blockers back at that point? Wouldn't be surprised to see that those loans originated back, well, the $2 billion line of credit originated back in 2023, I believe it said, or at least it was at zero back then. So I wouldn't be surprised to see that the J. Crew blockers had not yet been implemented. And again, when the tide goes out, who is going to be without swim trunks here? So I thought Carmax was interesting today. You're not seeing a lot on it. A 25% daily drop in any stock, okay, traded on the stock exchange should be a really big deal, okay? And I think from not just the consumer perspective or lack of health of the consumer, but also from, this unfolding private credit and banking crisis. All right, thanks for tuning in. If you like the content, if you enjoy the content, leave me a like. If you're not subscribed, the subscribe button for me, and leave your thoughts and comments. And with that being said, I will talk to all of you soon. Bye.